Hi everyone, Sean with Shertzerbookkeeping here, back with another video in our bookkeeping series. Okay, so back with reconciliation. I know reconciliation is a pain point for a lot of business owners. And honestly, bookkeepers run into some issues sometimes too. But reconciliation is a very important part of the process. So I wanted to just point out another thing that can happen, and it's a small amount that can sometimes feel annoying, but it just shows that every penny can be important. So I'm back here with our January reconciliation again. So as you remember, we want to have our checking account statement or whatever bank account we're reconciling. We want to have the statement in front of us as well. And we're going to put the statement ending balance in QuickBooks over here on the right-hand side. So we're going to take the ending balance on the statement, which is in this case, $3,092.76. And we're going to put our statement ending date of 1/31. Now we're going to hit start reconciling. Okay, so now, first thing I see as bookkeeper is our difference. We're negative $999.85. Why is that? Well, there's a couple things going on. Let's take a look and let's double check our balances real quick. Beginning balance $34.20.94, correct. Ending balance $30.92.76, correct. Okay, so let's look at our deposits. Our deposits or our credits on the statement is $3,100.15. QuickBooks has $3,100 even. Well, there's a part of the discrepancy, 15 cents. Now let's look over on our statement, $34.28.33 for our withdrawals. And payments, that's QuickBooks language, is $24.28.33, so off $1,000. Okay, that's our difference. Okay, so let's do our withdrawals real quick. If we go down here, we have a $1,000 credit card payment that QuickBooks doesn't think it came from the bank. So let's look on our statement. And our statement shows the credit card payment right here, January 26th, credit card payment for $1,000. So we can just check this one off. Now the real point of this video is our 15 cents. Well, why is there a difference? 15 cents, 131 interest. So here's what happens. Sometimes people will just go, oh, it's 15 cents. Let me just add that in and call it a day. You could do that. But what I recommend, because if you do that, you may have a duplicate. How do I know? Well, let's take a look, and just for giggles, let's QuickBooks, when you put in your statement ending date, QuickBooks automatically puts a filter on here to end the transactions that pull in for this at our statement ending date. In this case, January 31st. But let's take a look and let's just for giggles, let's expand it a couple days past. So let's say February 3rd. And we're going to apply it. Now let's scroll down and see what happens. Oh, look. Here's our 15 cent interest deposit. What happened was it was dated in QuickBooks for February 1st. But on the bank statement, it's dated for January 31st. So that could happen where it may have, in this example, not necessarily, but it does happen in real life that it is dated for the next day. Maybe it cleared the bank the next day. Some banks have it where there's a transaction date and a post date. You see it more on credit cards, but using this for an example here, it could be that timing difference. So that's why it's always a good idea if you have something that's near the statement cutoff date or right at the beginning of the next statement date, just expand your filter just a little bit to see if it maybe fell into the next day. So in that case, let's check it off now that we know, because it's on the statement here, or it's on the statement over here on the left. It's in QuickBooks just the next day, but it's a part of the January statement over here. Once we do that, now we have a $0 difference. Now let me show you what tends to happen, and I myself have done this and then realized it when I went to do the next month, and then I ended up going back and fixing it. But let's say you didn't expand your filter and you just had your statement ending date. You go, well, it's only 15 cents, big deal. Let me go ahead and add that. So let's go ahead and let's add this right here. Let's pretend we didn't do that. We're going to do this for 131.23 to match what the statement shows. We're going to put this into interest earned for 15 cents. Save and close. Okay, 131 deposit, yay. So let's do that. Now we're all done. Everything's matched. You're good to go, you think. So let's hit finish now. Okay, we're done, yay. But let's say, I don't have a February statement for this one currently, but let's just say we were doing it. Let's say we have a $5,000 balance and we're doing February. We're going to ignore this for now because I'm just going to show you what happens. Oh, look. This one is showing the 15-cent deposit. And I will pretty much 99% guarantee you this would not be showing up on your February statement. I'm sure there's an exception out there somewhere, but 99.9% of the time, this is going to be that January 31st interest transaction. If you have another interest transaction, that's going to be at the end of the month, maybe in this case, February 28th. But this is what's going to be your 15-cent one. So let's say you were doing your February reconciliation and you saw this and you went, oh crap, that was supposed to be the January 31st one, and you realized it afterward. Now what do? Well, you have two options. You can unreconcile the whole month of January. That wouldn't be ideal. So what you would want to do is you're going to have to unreconcile the one transaction. So let's go over here. Let's leave this one alone for now. We're going to go back here to the bank register. And here we go. We see this is the entry we made to basically make the reconciliation come out correct. And this is the one that came in from the bank feed. Again, the green squares tell you that it came from the bank feed. So what we want to do is match these two together. In order to do that, we're going to have to unreconcile this one. So to unreconcile, we're going to have to make this R and turn it to a C. QuickBooks is going to tell you it's already been reconciled. Are you sure you want to modify it? In this case, yes, we do. Okay, so now both of these are here. How do we match them together? Let's delete this one, because if we delete it and it came from the bank feed, that basically pushes it back to the bank feed. So let's delete this one. We're going to say yes. Now, let's go back to your bank feed. And here we go. Interest earned 15 cents. This is our bank feed transaction for this 131 transaction right here. It's dated 2/1, so we're going to, so normally there's going to be a match, and I'm not sure why QuickBooks isn't trying to match it, but QuickBooks is like that sometimes. So we know it's in the register, so we know it can be matched. So let's try to match it right now. Go over here, click match. There we go. There's our deposit for 15 cents. So now we're going to match those two together. And now, let's say now, oh, okay. You think, okay, now it's good. Now I can reconcile February correctly. So let's try to reconcile and see what happens. Nope, our beginning balance is off by 15 cents. We know it's that transaction. So how do we fix that? Well, that one's easy. Now we go back to our bank register, and we're going to, now we see it's a C again. When a transaction is reconciled, we make it an R. QuickBooks turns it into an R right here. So what we want to do in this case is click the C, make it an R, and save it. Because now you're telling it we want to reconcile this transaction. Yes, to keep your books in balance, you should use the reconcile tool to automatically mark transactions with an R. Are you want to save this change? Are you sure you want to change the save? Are you sure you want to save this change you made manually? Yes, we do, because we don't want to go back through the whole month. It's just the one transaction. So once we do that, then we can go back to our reconcile page. And we're going to close this one for now. Now we're back at the beginning. Now it's all correct again. So just to recap, if you have a transaction that's near, I'd say within a day or two, either way, of the statement end date, and it's not showing in QuickBooks on the reconciliation tool, expand your statement filter just a day or two to see if any of those transactions pop up, because maybe they cleared the next day, or maybe they're dated for the next day in QuickBooks. And then you can check that one off. Otherwise, you have to go back through. If you manually enter it and then find out it's in there, then you have to go back through those extra steps that aren't necessary. If you take the time, a few more minutes, even if it's only a 15-cent interest deposit or something small, every penny can count. So make sure you do things correctly. What do you think? Any questions? Please leave them below in the comments, and I will get to them as soon as I can. And if you need any help with reconciliation specific to your business, or you're looking for somebody to take that off your plate for you, reach out today and let's see how we can work together. Have a great day, everyone.